Hi, Assalamualaikum. My name is Tengku Putriana Atika binti Tengku Amiruddin Shah. My matrix number is A24B3161. Now let me briefly explain about the business nature of Farm Fresh and FNN Company. Farm Fresh Berhad is a fast-growing Malaysian dairy company known for its fresh, natural product like milk, blend-based, beverage, and yogurt. It runs a vertically integrated model with farms and processing facilities in Malaysia and Australia and focuses on health-conscious consumers across Southeast Asia. Next, Fraser and Neef Holdings Berhad, or FNN, is a well-established food and beverage giant with over 135 years of history. It produces a wide range of drinks, dairy, and canned food under popular brands like 100 Plus and Magnolia. And they operate across Malaysia and Thailand with advanced manufacturing and a focus on diversification and innovation.
Hi, greetings to doctor. I'm Yashina. My matrix number is A24A3070. Today I'll be discussing the liquidity ratio, which includes two main components, the current ratio and the quick ratio. The current ratio formula is current asset divided by current liabilities. For Farm Fresh, the current ratio was 2.26 times in 2022 and dropped slightly to 2.19 in 2023 and rose to 2.34 in 2024, showing a stable performance with minor fluctuations. The quick ratio, on the other hand, the formula is current asset minus inventory divided by current liabilities. Farm Fresh recorded 1.63 times in 2022, 160 in 2023, and improved to 176 in 2024, indicating better short-term financial strength. When it comes to average collection period, the formula is account receivable divided by credit sale times by 365. For Farm Fresh, ACP decreased from 60 days in 2022 to 54 days in 2023, then increased to 68 days in 2024. This shows a slowdown in collection efficiency in 2024.
Good morning. I'm Sharmita Dr. Fraja and my matrix number is A24A3047. Today I'll be discussing three different ratios, and the first ratio will be account receivable turnover ratio. The formula for this ratio will be net credit sales divided by account receivables. The graph shows Farm Fresh Berhad's account receivable turnover ratio between 2022 to 2024. The business launched a ratio of 4.97 times in 2022, which shows great receivable collecting efficiency. The ratio declined somewhat to 4.75 times in 2023, then more to 4.58 times in 2024. This consistent decline indicates that the company is spending a little more time yearly to collect payments from its clients. Even if the fall isn't great, it might show that Farm Fresh should evaluate its credit policies or improve its collection procedures to have a good cash flow and lower the risk of late receivables. Now, let's move on to the second ratio, which is inventory turnover ratio, and the formula for this ratio would be cost of goods sold divided by inventories. The graph illustrates Farm Fresh Berhad's inventory turnover ratio for the years of 2022, 2023, and 2024. In 2022, the company's inventory turnover ratio was 3.08 times, which suggests moderate inventory turnover. In addition, the turnover ratio decreased to 2.76 times in 2023. It implies inventory replenishment are slower than expected, or they are doing too much stocking, or sales are slowing. Then the turnover ratio increased to 3.80 times in 2024, which indicates that the inventory turnover or sales performance have been improved.
My name is Sidnur Isabadrina binti Rastam and my matrix number is A24A3239. I want to explain about capital structure ratios for Farm Fresh Berhad. First is debt ratio. The formula is total liabilities divided by total assets. The debt ratio has consistently increased over the 3 years from 2022 to 2024. Second is time interest earned. The formula is earning before interest divided by interest expenses. The ratio improved significantly from negative 5.10 in 2022 to 23.29 in 2023, indicating a strong recovery, and it slightly decreased to 11.94 in 2024.
Let's move on to the third ratio, which is total asset turnover ratio, and the formula for this ratio would be sales divided by inventories. From 2022 to 2024, the graph illustrates Farm Fresh Berhad's total asset turnover ratio. The turnover ratio of 0.50 times in 2022, Farm Fresh Berhad produced 50 cents of income for every 1 ringgit of total assets. In 2023, the turnover ratio increased to 0.59 times, and in 2024, it reached 0.63 times. The growth in the most recent 3 years points to an increase in revenue from its total assets. For Farm Fresh Berhad is a positive reflection on the operational performance of the company, and it's also functional for the company as it begins to utilize more of its asset base to create sales.
Net fixed asset turnover. The formula is sales divided by net fixed asset. The ratio maintained stable from 2022 to 2024, with a slight increase in 2023, followed by a minor dip in 2024, indicating consistent asset management despite small fluctuation in efficiency.
Hello, my name is Nitigan Apurvan Asokan. My metric number is A24A3524. Today I'm going to explain about the profitability ratios. Firstly, gross profit margin. The formula is gross profit divided by sales. In the period of 3 years, Farm Fresh Berhad's gross profit margin went down and then rebounded. At 27.16% during year 1, the margin was sound, showing sound cost control. It fell to 23.77% in year 2, most likely due to reduced prices or increased costs. It went up to 26.66% in year 3, showing better cost control and efficiency in operations. The gross Berhad's operating profit margin was strong at 20.74% in year 1, but dropped to 15.38% in year 2 due to higher costs or investments. It slightly recovered to 16.48% in year 3, showing some improvement in cost control through still below year 1 level. Next, operating profit margin (OPM). The formula is net operating income or EBIT divided by sales. Between 3 years, Farm Fresh Berhad's net profit margin fell steadily before steady. At 15.91% in year 1, it was healthy with excellent profitability. It was 7.95% in year 2, possibly because revenue growth slowed or expenses rose. It stabilized at 7.84% in year 3, indicating the decline was contained but not stopped. This implies that to restore profit levels of the past, either improved revenue or improved cost efficiency are required. Next, operating return on assets (ORA). The formula is operating profit divided by average total assets. The 3-year trend in operating profit margin of Farm Fresh Berhad is illustrated in the graph. It was high in year 1 at 20.74%, indicating good cost control. It dropped to 15.38% in year 2, most likely due to increased expenses or investment. Year 3 was some improvement to 16.48%, indicating cost reduction and productivity improvement efforts. This increase reflects that the company is attempting to stabilize and enhance profitability, but it is still less than year 1. Return on equity equals to net income divided by common equity. The 3-year ROE trend of Farm Fresh Berhad is erratic, either by way of more equity or reduced profits. It plummeted to 7.88% in year 2 after the started well at 13.08% in year 1 and rebounded to 9.17% in year 3. The improvement signifies greater efficiency and a healthy prognosis for future growth, though still lower than year 1.
For the current ratio, FNN recorded 1.74 times in 2022, dropped slightly to 1.73 in 2023, and rose back to 1.74 in 2024. This shows a stable trend, meaning the company can still meet its short-term financial needs. As for quick ratio, it was 1.05 times in 2022, 1.03 times in 2023, and back to 1.05 in 2024. This indicates that FNN maintains a strong immediate liquidity and cover its obligation using liquid asset without depending on the inventory. For FNN, ECP rose steadily from 48 days in 2022 to 51 in 2023 and 57 days in 2024. This upward trend is constant as it suggests lower payment collection from customers.
The graph shows the FNN's account receivable turnover ratio from 2022 to 2024. The company's turnover rate in 2022 was 5.16 times, therefore showing a good rate of collection of receivables. Reflecting better efficiency in collecting payments from consumers, the ratio increased dramatically in 2023 to 7.01 times. Though still above the 2022 level, the ratio fell somewhat to 6.15 times in 2024. This general trend indicates that FNN saw a major increase in its receivables collecting procedure in 2023 and kept fairly strong performance in 2024, suggesting good cash flow policies and effective credit management. The graph represents FNN's inventory turnover ratio for 3 years, 2022, 2023, and 2024. The boundary business's inventory turnover ratio was 3.66 times in 2022, which denotes that FNN continued to sell its product at an acceptable rate. FNN had an inventory turnover ratio of 4.67 times and then obtained 4.83 times in 2024. The 3-year ratio's positive trend shows that FNN's stock management had been always improving. A higher inventory turnover ratio can indicate better stock management, faster sale of goods, and possibly stronger sales, all which contribute positively to their operational efficiency.
For debt ratio of FNN is gradually increased from 2022 to 2024, indicating increased financial leverage with a sharp rise in 2023, followed by more balanced growth in 2024. Next, FNN times interest earned increased in 2023, then dropped in 2024, showing it can still cover interest costs, but may face rising costs or lower profits.
Lastly, this graph shows FNN's total asset turnover ratio for the years 2022 to 2024. The ratio in 2022 is 1.07 times, meaning that for every 1 ringgit in assets, it generated 1 ringgit and 7 cents in revenue. This shows a productive measure of how the company was using their assets. By 2023, the ratio had dropped to 0.98 times and then again to 0.96 times in 2024. The fact that there was a continuous downward trend suggests that FNN was becoming less and less efficient at generating revenue based on their assets in this period since it was declining gradually. The ratios are relatively strong yet declining, but the trend suggests that FNN may need to revisit efficient asset utilization as a measure of overall performance now or evaluate performance in a different manner.
FNN fixed asset turnover has decreasing from 2022 to 2024, which might be indicative of unuse of fixed assets or overlapping investment with revenue growth.
Hello, my name is Nitika Napurwan Asogan. My metric number is 824835524. Today I'm going to explain about the profitability ratios. Firstly, gross profit margin. The formula is gross profit divided by sales. In the period of 3 years, Farm Fresh Berhad's gross profit margin went down and then rebounded. At 27.16% during year 1, the margin was sound, showing sound cost control. It fell to 23.77% in year 2, most likely due to reduced prices or increased costs. It went up to 26.66% in year 3, showing better cost control and efficiency in operations. The gross margin of FNNHB increased significantly from 26.3% in 2022 to 31.5% in 2024, as revealed by the bar graph. This shows that the company either improved prices or was able to maintain low costs, increasing earnings. The trend supports future growth and competitiveness by revealing sound operations, and FNHB's margin steadily rose from 10% in 2022 to 12.9% in 2023 and 13.5% in 2024, reflecting better cost control, efficiency, and strong financial discipline. The company is attempting to stabilize and enhance profitability, but it is still less than year one. FNNHB's operating profit margin profit increased from 10% in 2022 to 12.9% in 2023 and continued to increase to 13.5% in 2024, according to the bar graph. It is the result of ever-increasing better cost control and operational efficiency of its main business. Strong financial discipline and increasing profitability are evidence in the trend. It increased from 8.6% in 2022 to 10.8% in 2023 before decreasing slightly to 10.4% in 2024. From the bar graph, the margin is still higher than in 2022 despite the small decline, showing overall heightened profitability. The slight decrease signifies higher costs or other issues in 2024. The return on equity of FNHB increased from 12.8% in 2022 to 16.2% in 2023, indicating better profitability. Although it decreased by a minimal percentage of 15.2% in 2024, it was higher than the one in 2023. Despite the decrease in the last year, this trend indicates high returns for the stockholders.
Next is conclusion. Let's look at the financial performance comparison between Farmfresh and FNN from 2022 to 2024. Farmfresh consistently showed stronger liquidity with higher current and quick ratio, indicating good short-term financial health. However, FNN led in efficiency with better inventory and assets turnover ratio, reflecting its maturity and stable operation. In terms of profitability, Farmfresh had stronger operating margins, but FNN outperformed in net profit margin and return on equity, especially in 2023 and 2024. This shows FNN ability to generate higher returns for shareholders. Lastly, Farmfresh debt ratio increased as it financed its expansion, while FNN maintained a stable capital structure. This highlights Farmfresh aggressive growth strategy versus FNN's balanced financial approach. That's all from me. Thank you.
My name is Nurhamiza binti Bahrain. My metric number is 8248360. Recommendation part. Starting with Farmfresh has several key areas need attention. First, FFB must improve its feasible collection. The average collection period increased from 54 to 68 days, which may hurt cash flow. We recommended tightening credit terms and using automated invoicing system. Second, inventory management should be enhanced despite improvement in 2024. The previous year show inefficiencies. The company should adapt demand forecasting tools and optimize supply chain operation. Third, FFP debt ratio rose to 45.84%, showing higher reliance on borrowings. To reduce financial risks, the company should explore equity financing and preserve first profit instead of taking more loans. Fourth, profitability must improve. FFB should focus on cost control, automation, and premium products like plant-based and dairy beverage to increase margin. Last, the company should invest in digital transformation such as automating logistics and marketing to boost operation efficiency and stay competitive. Now for Fraser and Neff FNN. FNN has showing strong financial stability. It should maintain effective receivables and inventory practice while expanding high-margin product lines, especially in health and ready-to-drink segment. FNN is also advised to continue controlling costs and enhancing its digital presence and e-commerce channel. Last, with a stable capital structure, FNN should maintain a balanced funding strategy using internal fund and low-risk borrowing.
Hello, my name is Nur Sabrina binti Hussein and my metric number is A24P2971. I'm going to talk about funding section. Farmfresh Berhad and Fraser Hill Neff Holding Berhad employ distinct funding strategy tailored to their business model, growth stage, and capital needs. Farmfresh Berhad, a young, fast-growing company, relies heavily on external funding through its RM301 million IPO in 2022 and a 200 million Suku Wakala to support aggressive expansion, including established processing plant in Malaysia, Australia, and also Philippines. The IPO fund was strategy allocated to demonstrate an international project and working capital, while the Suku provide low-cost, long-term Islamic financial for capital expenditure and debt refinancing. In contrast, FNN, a well-established conglomerate with strong internal cash flow, RM 1.18 million in year 2022, predominantly fund its operating and strategic acquisitions such as Kopwa Land and Ladang Permai Daman. Through retaining gearing selective low-gearing borrowing, its strong financial position allowed it to finance new facilities, pay substantial dividend RM 220 million in the year of 2023, and invest in ESG initiative without heavily reliance on external capital. Overall, Farmfresh Berhad benefits from equity and Suku to scale rapidly, while Fraser and Neff Holding Berhad capitalize on financial strength and stability to grow organically and through acquisition with minimal financial strength. Thank you.